Hello guys, in today's video I'm going to be walking you guys through everything you need to know about my simple strategy that I use in trading Nasdaq. You're going to be learning my confluences, my entry, my exits, and how I feel when I'm trading this instrument because it's really volatile. You don't want to play around this thing. Okay, let's get into it guys. I already made my markup and this is Nasdaq on a daily time frame. Now if you wake up in the morning, these are things that you need to put into consideration. So the first thing you do first off when you wake up in the morning, you have to come to the 4-hour time frame to look out for what the market is currently doing. We understood that the market is a bearish market. Okay, it means that the market is dropping to the downside. So the next thing that you're going to be doing, you need to mark out your break of market structure on 4-hour time frame guys. Mark out your break of market structure on 4-hour time frame. So this is the first break of market structure right here. Sorry, let me put out my main tool. Okay, so let's board this one for those using phone to view. Then the next one that we had this internal break of market structure. Okay, so you mark out all the recent break of market structure that you see on the 4-hour time frame. Okay, after you've marked out all the reasonable break of market structure on the 4-hour time frame, all I need you to do right now, I need you to scale down to the 1-hour time frame to mark out your order blocks. Okay, coming here on the 1-hour time frame, you need to mark out the order block that align with the trend. What I mean by order block that align with the trend, since the market is bearish right now, let's use here for example, since the market is bearish, you need to start marking out order blocks that is bearish, the bearish order block. Okay, you need to start marking them like this. Okay, you need to start marking them like this, waiting for when price is going to get there next. Okay, so now this is the current chart right now. This is what we're currently using. So now let's mark out the current order blocks. Okay, now we had this first one at the top here, which is the origin. Okay, this is the origin, so you're going to extend it to the future right here. You can name it whatsoever thing that you feel like to do. Okay, but to me, I have my template right here. I have feed order block, I have flip zones, and I have liquidity order block. So these are the type of order blocks that I use in the market. Okay, so in this case, this is called a liquidity order block, and the reason why it's a liquidity order block, because it took out liquidity. So I can start re-emphasizing about liquidity order blocks. If you want to learn about liquidity order block, use the link that's going to be popping up right here to go watch that video. Okay, so you learn how to mark out liquidity order block. Okay, so now the next one that we see around here is this week right here. Let me zoom out for those using phone. So we can see from here that we had these highs right here, and what happened, we saw how market splashed up. We saw how this price went up right here with this bullish candle to take out all the liquidity that was sitting right here after the price started distributing to the downside. So now this is what we call the liquidity order block. Okay, you mark the candle from the top to the finish. Okay, so you extend it to the future. Just extend it guys, don't judge me yet, just extend it to the future and wait for when price is going to get there next. Okay, so now after we've marked out then the reasonable order blocks right here, the next thing that I want you to do right now, I want you to scale down again to the 30-minute time frame. Okay, the reason why I love this strategy so much, it comprises everything you need to know about multi-time frame analysis, market structure, and also the confluences you need to look out for before you take any trade setup in the market. Guys, I want this video to be a push to you as always. Go back to your chart guys, look out for all these things, mark them out. Okay, back test and forward test before you go live trading the system. Okay, so on the 30-minute time frame, you have 3 jobs right here. Firstly, you have to refine your order block. Let's refine our order block right now. So refining our order block so we can be able to have a smaller stop loss, because this is NAS 100. Okay, it's really volatile. Okay, so now instead of we to have this big order block around here, let me pull out the color right here, is too big, so we have to refine it. So now refining it right now, here we have this one right here, but we can see that this one has already been mitigated here. After we got this mitigation, we saw how price, after mitigation around here, we saw how price swing to the downside. Now this is where you're going to be putting your order block right here, because this one is no longer valid because market has already mitigated that. Okay, so the next thing that you're going to be doing, you need to mark out this one. So now this is your master order block right here. Okay, so the next job I want you to do right now is to start marking out your inducements in form of liquidity guys. So now inducements are places that's going to trigger traders to start selling the market early, and liquidity is a place where traders are going to put their stop losses. Okay, so now in this scenario right now, where is your inducement and where is your liquidity. Okay, liquidity sits at each highs and lows of the market because we usually keep our stop losses at the highs or lows of the market. We can keep stop loss around here, we can keep stop loss around here. So now this is a form of liquidity. Okay, and now where is your inducement? This is your inducement, guys, because this is an order block right here that's going to force trader to start selling the market. Okay, it's an inducement, so this is where they are going to look to start selling the market around this region. So now inducements are where you're going to be seeing early sellers in the market. They want to start selling the market very, very early. And liquidity, which is here, okay, which is this order block right here, because it's very, very early. So this is your inducement and this is your liquidity. So liquidity is where people usually keep their stop losses. Now let me prove to you that liquidity is where people keep their stop losses. I bought the market around here, catching 1:5. So now when I bought the market here, let me zoom in. So now when I bought the market here, I knew that the market was a downtrend, okay? I just took this crap. So when I bought the market around here, where did you think I'm going to be keeping my stop losses? This low. Okay, this low, this is where I'm going to be keeping my stop losses, and my stop loss is my money. Okay, this is where I kept my stop losses around here, and this is a form of liquidity. So I just have to pull out this trend line and name all those sides to be liquidity because price is coming back to take out that liquidity around here. Okay, so now after you've marked out, after you've refined your order block, which is in this case we refine our order block here, and we mark out our inducements and also our liquidity. Sometimes you might not see the both, but you might see one. Whatsoever the case you might see, you just take it. Okay, then this is when you start executing your trades. You start executing your trade where on the 30-minute time frame with words, guys, with a pending order, guys, with a pending order. Don't do instant execution if you're trading with us, guys. It's a pending order. Okay, it's a pending order, guys. And this is where we took our trade around this region. Okay, you can see that this is not a guesswork, this is a precise entry. I keep telling you guys that it's not a guesswork, it's a precise entry. So we got in around here and we are risking how many pips, guys? We are risking around 100 pips. But in this case right here, we risk just 80 pips, but here we're risking 100 pips. Now, don't judge me, guys. Depend on the account that you're trading, okay? If you have $20 account, you can do 50% of that $20 account, risking $10, which is 100 pips. Okay, so now if you put 0.01 right here, you're risking $10. And if you're making $10 times 10. So you're making like $100 around here. So it depends on what you come into the market with. Okay, even if you come into the market with as little as 20 euros, you can be able to trade our system alongside with us. Okay, so now this is where we got our entry around here, and when price splashed to the downside, this is where it comes to how I'm thinking when I'm trading this type of instrument. Okay, when price splashed to the downside, right, the first thing that I do instantly is to break even. Break even means that since my initial stop losses were here, let me bold this one for those using phone. So since my initial stop losses were here, so all I had to do, I had to drag them to cover my entry, to protect my capital. So I drag them to cover my entry around here. So now I'm running risk free. Okay, I'm running risk free. So now I was just waiting for market to take out this low because there's an liquidity right here, there's liquidity right here, there's liquidity right here. So the first one it took out was here, the second one was here, and the third one was here. So as soon as price get here, we execute all our position, we liquidate them, and we had our take profit around that region. Okay, guys, you need to go back to this video because I share a lot of things right here, guys. Go back to this video. This video should always be a push to you guys. I'm really giving out things here that you cannot see anywhere on YouTube. All I ask in return is for you to like, subscribe to this YouTube channel, and share it to your friends who want to learn how to trade this thing the right way. Okay, until next time, guys, this is going to be the final up on it. Bye for now, guys.